Welcome to the Santu Pirls Stock Market Commentary video, your weekly window on stock market technical conditions, featuring the proprietary bull-bear point and figure market breadth summary chart for September 3rd, 2017. Market breadth. With this past week's market advance, our bull-bear point and figure ratio at 1.17 rose from 0.91 last week, moving back into bullish territory. The total count of securities in bullish or bearish patterns increased 3% to 2,878. The count of bearish stocks decreased 9%, while the count of stocks in bullish patterns increased 16%. The Santu Pirls P&F Market Breadth Summary Chart shows us a market now 1 week in bullish territory. Paid subscribers have access to the OpenOffice Calc data from which the chart is generated. You may become a paid subscriber by visiting s2pmarketsignal.com, clicking Membership, clicking Register, and following the prompts. To subscribe free of charge to the weekly Santu Pirls Stock Market Commentary via email, simply enter your email address in the space provided and click Subscribe. The well-known market breadth indicator, the Nasdaq McClellan Summation Index, rose 144 points for the 11th advance in 19 weeks. At a negative 163.55 points, it continues below the 6 tops above plus 100, continues below the April 2017 bottom, and continues above all 4 remaining bottoms below minus 100 in the last 3 years, including the newly formed August 2017 bottom. Volume analysis. In this week's volume analysis, the Nasdaq Composite Index ended in neither accumulation nor distribution mode, with average daily volume higher than the prior week. In the last 2 weeks, the Nasdaq had 5 accumulation days and 1 distribution day. Accumulation days are counted when the index closes up on higher volume than the prior market day, while distribution days occur when the index closes down on volume higher than the prior market day. Last week, the Nasdaq ended in neither accumulation nor distribution mode on lower average daily volume. Momentum. On Wednesday, 8/16, the CCI 20 had 6 days below zero to begin a Woody's downtrend. The CCI 20 daily is now at a positive 155.92, up from negative 43.32 last week. The CCI 20 daily now has 3 consecutive days above zero for a likely change of trend back to up at next Thursday, 9/7, close. In Woody's CCI trading system, 6 consecutive bars above or below zero are required for a change of trend. The weekly CCI 20 of the Nasdaq Composite Index began a Woody's uptrend 70 weeks ago, while the daily CCI 20 began a Woody's downtrend 2 weeks ago. The CCI 20 weekly has risen to a positive 109.99, up from a positive 43.07 last week, and forming a zero-line reject long entry signal for Tuesday, 9/5 open. We will follow the result of this trade simulation in next week's commentary. Industry rotation, the last 2 weeks. All of the top 5 industries are positive, and only one of the bottom 5 is negative. Summary: some tech and gold and silver on top, REITs, KBW Bank, and some tech on the bottom. Bullish, disk drives continues in and now leads the top 5. Semis has left the bottom 5 and entered the top 5. Brokers and S&P Retail have left the bottom 5. Bearish, KBW Bank, continues in the bottom 5. REITs has left the top 5 and entered the bottom 5. Networkers has entered the bottom 5. Gold and silver continues to lead the top 5. Focus this week from www.actingman.com. How to Make the Financial System Radically Safer by M.N. Gordon. The following are some key points, a chart, and insightful illustrations. Curious skepticism can lead to the darndest things, which is why Big Brother strongly recommends that citizens remain in a medication and cable TV-induced apathetic stupor. To make this happy outcome easier to achieve, stagnation in real wages was successfully introduced a number of moons ago. Forced to work to exhaustion just to keep their heads above water, citizens tend to be more docile in their shrinking free time. Last Friday, for example, Fed Chair Janet Yellen gave a speech to her friends and cohorts at the annual Central Bankers Powwow in Jackson Hole, Wyoming. There, she patted herself and the financial regulatory community on the back for what she believes has been a successful execution of financial regulations. Quote, "The events of the 2008 crisis demanded action, needed reforms were implemented, and these reforms have made the system safer." End quote. How Yellen knows the reforms have made the system safer is unclear. Like France's impenetrable Maginot Line, the regulations Yellen lauds are backward-looking. They are suited to preventing the last crisis while ignoring new and greater threats amassing just beyond the horizon. If mousetraps were designed like our nifty new financial regulations, this is what they would look like. Don't you feel safer already? Alas, it's no longer a normal world. Years of abnormal monetary policy has fabricated an abnormal world. Surely something will break before things are bent back into place, assuming they ever get there. The Dodd-Frank Act, which was rolled out in response to the 2008 financial crisis, has turned out to be a classic case of knee-jerk regulatory overkill. President Trump has promised relief to certain aspects of the Dodd-Frank Act's suffocating regulatory regime, including stress test and capital requirements. These requirements force banks to keep more capital on their books as opposed to investing it in interest-earning assets. But Fed Chair Yellen, a dyed-in-the-wool central planner, has a very narrow focus. In her world, more control via more regulations always provides for a more stable financial system. Yet, as the chart below shows, she's dead wrong. Barney Frank's maze of regulations has made it harder for small businesses and entrepreneurs to access the capital needed to grow and create jobs. At the same time, the new financial reforms haven't minimized risk. Moreover, they've set taxpayers, that's you, up for a future fleecing. Congressman Robert Pittenger elaborated this fact in a Forbes article last year. Quote, "Even Dodd-Frank's biggest selling point, that it would end too big to fail, has proven false. Dodd-Frank actually created a new bailout fund for big banks, the Orderly Liquidation Authority, and the systemically important financial institution designation enshrines too big to fail by giving certain major financial institutions priority for future taxpayer-funded bailouts." End quotes. What gives? Regulations, in short, attempt to control something by edict. However, just because a law has been enacted doesn't mean the world automatically bends to its will. In practice, regulations generally do a poor job at attaining their objectives, yet they often do a great job at making a mess of everything else. Dictating how banks should allocate their loans, as Dodd-Frank does, results in preferential treatment of favored institutions and corporations. This in itself equates to stratified price controls on borrowers. And as elucidated by Senator Wallace Bennett over half-century ago, price controls are the equivalent of using adhesive tape to control diarrhea. The dangerous conceit of the clueless, the house of cards they have built, is anything but safe, and they most certainly cannot fix anything. Listening to their speeches, that seems to be what they genuinely believe. A rude awakening is an apodictic certainty, but we wonder what or who will be blamed this time. Not enough regulations? The largely absent free market? As they say, it ain't what you don't know that gets you into trouble. It's what you know for sure that just ain't so. The best way to regulate banks, lending institutions, corporate finance, and the like is to turn over regulatory control to the very exacting and unsympathetic order of the market. That is, to have little to no regulations and one very specific and uncompromising provision. There will be absolutely, unconditionally, categorically no government-funded bailouts. Without question, the financial system will be radically safer. Thank you for watching this week's Sand to Pirls Stock Market Commentary video featuring the proprietary bull-bear point and figure market breadth summary chart compiled by Donald Pirl, www.s2pmarketsignal.com. Hoping that you have been enjoying a peaceful and pleasant Labor Day weekend, that you are looking forward to a prosperous and productive week coming up, and wishing you true success.